So, what is market analysis? In a nutshell, and I mean in a nutshell, it's the study of price behavior to determine price in the future. In other words, you must realize there's much more to it than this. This is very broad, trying to take something and put it into a single sentence. But what we do is we identify price trends and price exhaustions. Trends meaning that we're looking at the trend of a price based on its behavior. We know that it's in a uptrend or a downtrend, so we know how to react to it or what to look for. And we also learn to identify the exhaustion of that trend so that we'll know that this trend is coming to a close. Now, to say that you're studying the price behavior over time to determine the price in the future, that sounds like you're trying to deal with a crystal ball. No, it's not. It's no different than, say, a zoologist who analyzes or studies animals can tell you what to expect from this gorilla if you sneak up on him and start yelling, because he has studied the behavior of these gorillas. This is what his profession is. And likewise, a market analyst can study price and time in the markets to determine the probabilities of what's about to happen. For example, look at this is extremely simple analysis of the market right here. What we have is we have an uptrend. And based on the line that you see going up, this price line following the trend, when it gets broken with a close below it, and then its low of that candle is broken as well, we know that we're looking at a start of a new downtrend because we see exhaustion of the uptrend. If you're not following me very well right now, that's okay. As a matter of fact, let me say it one more time, and I'll just point it to you a little more clearly. Okay, once again, we have an uptrend based off of this line, which was drawn against the lows that would correct down and bounce off of it, okay? This circle is showing you an area where price has closed below this trend line. This trend line has been broken with the close shown by this circle, where the close below the trend line on this day here, right there. Then its lows were broken here. And then again here, letting us know that we have reached exhaustion of this trend to the upside. This bullishness has exhausted, and we will start looking for a down trend that will start working. The prices will work their way down. Okay? Now, watch what happened. Here is the result. As you can see, price floated sideways for a minute and began to fall. Why? Because we saw exhaustion in this bullish trend to the upside. We were able to analyze the behavior of price over time, price moving up and down, price coming across, and as time went on across, the price reached an exhausted point, proven that it was exhausted by breaking the trend line with the close and then falling below its lows to begin a new trend down. That is the nutshell. That is a simple example of market analysis. Market analysis is much more to it than this. Okay, I'm just trying to give you a very basic view of what I'm talking about when I say we analyze price and time and its behavior to determine future price over time. Let's move on. Now, let's take a look at styles. What do I mean by styles? Well, we have investors. These are people who are looking for very long-term investments. They're investing in some corporation or company. They are very, very long term. They buy and they hold. They're investors. Then you have what we call the position trader. They're not quite the investor in that they will buy and release a particular item we call instruments, such as stocks, bonds, currencies, commodities, futures. Call them instruments. Might hold a particular instrument for a few weeks or a month, maybe, until they realize a good profit from that holding, and then they will release it for their profit. They're called position traders. We also have those called swing traders. Swing traders are buying and selling holdings or instruments more often than a position trader. They may hold a position for a matter of a few days or possibly even a few weeks. They base their trades on what we call the swing, which is, as you saw in the chart, is where the price in an uptrend maybe would go up and then maybe swing down for a few minutes only to bounce back up. These are called swing traders. Then you have the day trader. They're pretty much trading pretty much on a very regular basis, on a daily basis. So they might buy an instrument at the beginning of a day and sell it before the day is out or when the day is out, or maybe hold it for 1 or 2 days. But they're called day traders. Then you have the scalp trader. These are people who are trading and buying and selling maybe 2 or 3 times during the day. This is a very intense form of trading, but a style of trading nevertheless. Now, if you are to be successful in any of these styles, you have to analyze the market. Thus, we have various styles of analysis. There are basically 2. First style of market analysis is fundamentals. This is a way of analyzing on a very slower pace, a more long-term bias based on things such as a company's ratio of profit or loss, or based on their debt load, or things of that nature, their inventories, their earnings, and so forth. The other type of analysis is based on technicals. Technicals are what we do at Forex University. This is where we analyze price and time to determine future market behavior. As I said earlier, fundamental analysis affects the market at a much slower pace. Basically, for example, if the Fed says they're going to cut interest rates by 0.5 point, this is a fundamental thing. Or say that inflation is showing that it's on the rise, or it's falling, or unemployment is on the rise, or it's falling. These are fundamental forms of analysis that they determine, well, based on that information, we should see this happen. But it won't happen over the course of a day or two. It's a long-term, slower pace way of analyzing what's going to happen in the market. The technical analysis affects the market at a much faster pace because it's dealing with day-to-day, minute-to-minute, week-to-week information that's based on the price and the time. And once that price does what we might anticipate it to do, it's affected by that much quicker pace. We're focusing, once again, on the technicals. Now, in technical analysis, again, I've said this a few times, but I'm going to say it over and over. I need you to get the understanding. We use price and time. Technical analysis tools that we use. These are things that use formulations and calculations and methods, things of this nature, and they calculate based on history of price and time, and its behavior will help us determine outlook. Okay, so we call these things tools. Quick View Market X-Ray tool is a particular tool that is exclusive to Forex University. And what makes it so special is that it takes all of the analysis, the various analysis styles, the various analysis tools, and their methods. And when they agree with one another, because sometimes analysis methods and tools don't necessarily match or become identical in their analysis, but when we get that happening in the market, it gives the strongest probability of what to expect. In fact, to the point of being probably is almost as good as a crystal ball. Of course it's not. Nothing will ever be 100% in anything that we do, whether it be in the market or anything else for that matter. But the Quick View Market X-ray tool is extremely, extremely powerful. That's why we call it the X-ray, because it's like an X-ray view of the market, just like a doctor can see inside your body and know what's wrong, and he can scan you and look and see everything that you can't see on the outside. There are many things in charts that we look at, but sometimes there are things that are happening in the market that we cannot see in that chart. That's like looking at your body, for example. But with the Market X-ray tool, we can X-ray right through there things that you cannot see in a chart to give you warnings and signals and let you know what to do and where to buy or sell. It's extremely powerful. We'll get into that. But for now, we just want to explain to you, because we're talking about using tools in market analysis. Learning technical analysis or even fundamental analysis, any analysis of the market, it takes time. You cannot attend a weekend seminar and become a market analyst. You need education as well as experience in dealing with learning market analysis. That's where ForexUniversity.net comes in. We realize that you can't become a market analyst over a weekend, but we realize how it works and why it works, and therefore are able to educate you in a course that extends more than a weekend or a week or even a month. We know that experience is part of that education, and so we teach you in a mentorship style environment versus the weekend seminar. We actually mentor you, which is how most technical analysis or market analysts become market analysts for the most part. And this is the only way to really compete with the heavyweights who had mentors themselves. A true market analyst doesn't need expensive software to profit either. They can take simple things like a chart, maybe a tool or two, and do calculations on their own. They don't need anything to do it for them. And they are the ones who generally, now those of you who may have traded before know what I mean by this. Those market analysts are usually the ones who are buying when everyone has been selling. And that person who's been selling, they're selling because they bought, but it went the wrong way and the price is falling. And they finally get out at the bottom where they can't take it anymore. They've lost so much money. And then all of a sudden the market turns around and goes back, reaching new highs. And they're so frustrated. It's the market analyst who knew that this is where their bottom was. And they didn't need to have expensive software that cost them thousands, even tens of thousands of dollars that people pay for, because they understand how this thing works. It's not just using the software. And this is extremely important. And this is why we started the Forex University, because too many people have the wrong idea about trading the markets. And we intend to clarify that and get it straight with whoever is fortunate enough to run across the Forex University, where you can get your degree in profit taking. That's our philosophy. Your next lesson, we're going to start getting into trading the Forex market. It's called Trading Forex 101.